G'day folks, welcome back to Pete's Investing. It's February the 4th, 2024. This is the US and Brent Crude oil price update. We're also looking at BP Prudhoe Bay Royalty Trust. The overall trend is bearish, so just be aware of that. So let's look at each of the charts. So first, looking at the US crude oil price chart analysis, the weekly, daily and hourly. And on the weekly, you can see here we've got just breaking up to a bullish momentum on the ADX 25. So at the moment, and you also the CCI 400 is also broken to the downside, but it's showing a bearish outlook. So somewhat mixed signals, but I would say overall neutral to bearish. On the CCI 150, that's moving in line with the price, no divergence to talk of yet. On the daily, the ADX is showing a clear bearish signal, and the CCI 400 is broken down near its moving averages and possibly going to break below that in the coming days as more of a big bearish signal. Again, no divergence on the CCI 150. On the hourly chart though, if I zoom in, the ADX is bearish, the CCI 400 is bearish, and the CCI 150 is moving in line with the price. We did have a bullish divergence back here, and we cancelled that out, but you could probably argue that there was if I move that to that point, you can argue that's almost a double top on the CCI 150. But I want to be very strict with the rules, and as soon as I see that go higher than the opening point of the divergence, I cancel it out. So you don't want to sort of break the rules, because how far up do you go? So I'm going to leave that as a failed divergence, even though the price reached that new peak and then it fell off and it would have hit our target. So I'm still going to count that as a failed divergence, so just be careful how you treat divergence. The general rule is, as long as that's in a downtrend, or at least a double top in this case, doesn't go higher than that, we consider it a divergence. So as soon as it goes higher, and that point did, then the divergence has failed. Next, we look at, on our list, the Brent Crude price, and that's pretty much the same trends as the US crude. You can see here the CCI 400 is broken below its moving averages. The ADX is a fresh breakout on the positive, but still somewhat bearish, and the CCI likewise in line with the price. The same indicators are all aligning, same as the US crude price on the daily, and on the hourly likewise we had a new high reached, hit this resistance up here at 84.18, and then broke to the downside, and that still would have been a failed divergence had we just measured it to there. That point is still higher than that, so we wouldn't have counted that as a divergence. Next, we look at BP Prudhoe Bay Royalty Trust. You can see here the ADX is clearly bearish, the CCI 400 is clearly bearish, and the CCI 150 is also moving in line with the price and bearish as well. The daily, still, the ADX has just broken to the bearish side as well. You can see there, the CCI 400 is still moving somewhat bullish, and you could argue that could be a divergence. There was a bullish divergence back here on the CCI 150, and the price reached its little bottom there, then it started bouncing, but it didn't quite hit our target, and it's moving now sideways. So this could possibly still collapse, or it could keep going up. We'll keep an eye on it. That's on the daily, and on the hourly, we had a few bullish divergences back here on the CCI 150. You could have counted that. It's 1, 2, 3. Now we still haven't hit this overall target. If you draw one line, it still reached this bottom. And we still haven't hit this 23-38% target, so I'll keep an eye on that. It's currently trending in this range there. So a few trends and developments to be aware of. Demand concerns. Global oil demand growth is expected to slow in 2024 due to economic slowdowns in major economies. Supply side could be impacted as well, with increased US production combined with stable output from other major producers in keeping supply well balanced for now. Price fluctuations, both weight traded and Brent crude, have seen downward pressure in recent weeks, and factors influencing prices, geopolitical tensions with the ongoing wars, global economic headwinds, recessionary fears in major economies weigh on demand expectations, putting downward pressure on prices, and inventory levels relatively high. Global oil inventories provide a buffer against supply disruptions. Then we look at other considerations, monitoring demand growth, closely watch economic data and forecasts to assess possible changes in oil demand. Again, we spoke about geopolitical risks, inventory levels, track global oil inventory changes as they could indicate future adjustments in supply and prices, and technical analysis, consider incorporating technical indicators to inform your trading strategies, but remember they are not foolproof. Just some other data sources to be aware of should you wish to dig deeper. So again, just the overall trends are bearish for oil. We've got some slight positive movement to the upside with divergence, but at the moment overall bearish. So just be careful about going long at the moment. If you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.